Joining us now, Skylar Olsen, Zillow chief economist. Skylar, how is this possible? I mean, homes were already so expensive, and then mortgage rates going up. Is it just the lack of inventory?
That is, a big, huge, massive part of the picture. When we talk about less homes coming on the market, fewer homes coming on the market now than, say, pre-pandemic, we're talking 39% down just last month. So the forecast that we've recently updated is we think home prices could grow as much as 5% over the course of 2023. Only 2 months ago, before we saw these radically low new listings numbers, we were forecasting something much more like 1.2%, something small. Now 5%, that's on the hotter side of steady and stable.
How much risk do we have in the market now with affordability being so low? People are they're spending more of what they're making on housing, and employment's pretty high, but it doesn't always stay there.
Yeah, risk is an interesting kind of thing to think about even in this situation. I think because the existing homeowner has access to their pre-existing low mortgage rate, they've fixed it in for, decades for many of them. 70% of mortgage homeowners have a mortgage rate below 4%. That's a low risk environment. They've got financial stability. They've got lower monthly payments. They can afford to save. They do not want to give that up and move on. That's what's keeping the new listings back so much. If we think about from the perspective of a first-time home buyer or a hopeful first-time home buyer, in other words, a current renter that wants to move on, they're experiencing much higher rents than last year. Rent probably takes up around 3% more of a median household income. That's a good reason to push forward. So there's low risk that home values will fall. And actually, when we plug in our numbers and run scenarios in our forecasting model, we can, really turn mortgage rates up. And it's very hard to get prices to fall because of what we watch new listings do. We're in an environment right now, this is challenging.
When I hear you talk about that with rent prices, I think about those rent prices and those shelter costs, how big of a portion of CPI they are. We have these conversations on our air constantly that portion of CPI, that data factors in on a lagged effect, and it's part of the reason why market bulls have been saying, hey, listen, disinflation is happening much more quickly than the data is suggesting. But when I hear you talk about high rent prices, it doesn't sound like that's the case. Has rent turned higher?
Yes, well, let's put it, often we have to get pretty specific when we talk about, what is happening. So rent grew incredibly quickly over the course of 2022. Then we saw it slow down, certainly in the, first kind of quarter of this year. Now rent is growing slower than a pre-pandemic pace. So, the pressure is off of a lot of rent markets. That's also why we've seen multifamily permits suddenly come down. But that does not mean rent is falling anymore. Rent has continued to grow. I think in terms of those kind of overarching rent inflation numbers, I think what we're seeing there, or we can start to anticipate, is that it's a bit of a good sign, not as much of a good sign as I would have wanted to hope in order to get really good confidence that inflation is going to come down and we can finally get a break on mortgage rates. But it is something, less pressure than maybe pre-pandemic. Unlike U.S. home values, the home value picture in those month over month, that's hotter than pre-pandemic.
Okay.
It's pretty extraordinary.